Hi there, I'm Paul Bagnall. Welcome to today's edition of Market Call here on BNN Bloomberg. Barry Schwartz is our guest today, Chief Investment Officer at Baskin Wealth Management. He'll take your questions on North American large cap stocks. The number to reach us at, as always, is 1-855-326-6266. We're ready to take your calls right now, so pick up your phone and do give us a call, or send us an email at marketcall@bnnbloomberg.ca. Barry Schwartz, welcome to the program as always. Looking forward to talking to you over the next hour. Markets, North American stock markets, as we know, have spent the fall pushing into record high territory, and you and your team at Baskin think that this is rational, that markets are supported by fundamentals.
I believe so. I guess we're now into a 2-year bull market, right? The market bottomed in about October 2022, so here we are 2 years later. And I guess if you look back even further, Paul, if you and I were sitting here in 2019, I would have told you that we would have a pandemic, a global pandemic that would shut down the world. I would have told you we would have a Russia-Ukraine war, we would have Middle East conflicts, we would have the highest inflation since 1980, the highest interest rates in many, many years, just so many other world events. And then I would have told you at the same time, but don't worry, the S&P 500 is going to double over the next 5 years. Mm-hmm. You would have looked at me like I'm crazy person. But that's exactly what happened, right? So what does that tell you? Focus on the fundamentals, try to avoid the noise, and the fundamentals are pretty good, and that's why we're at record highs. We're at record highs because the earnings of the S&P 500 companies have been tremendous, primarily, of course, some of those big techs. And now, of course, we're in the part of the cycle where interest rates are coming down, a big 50 basis point, 0.5% cut by Bank of Canada yesterday. More to come from both Canada and the U.S. Inflation has come to a normalized level. So this is where we are today. What will get us over the hump for more record level performance is earnings. What's
your take on earnings season thus far? The bar has been set relatively low, right? Expectations are for modest growth this quarter.
That's right. Well, obviously, look at that gigantic move today by Tesla. So right. A very low bar going into that one. We're just, I guess a lot of big numbers will start coming out next week when we get some of the big techs. But so far, so good. I think it's what's happening is a continuation of more of the same from the beginning of the year. Companies tied to the housing market, companies tied to the low-income consumer, companies tied to some of those issues are not doing as great as expected, the transports, for example. But most expect things to pick up. It's not that things are so bad, it's just things were so good for a lot of those companies in 2020 and 2021 and the start of 2022 that it's just hard to find what the normalized level is, right? The amount of goods that are being shipped were so insane in 2021 that, we have a company, TFI International, CP Rail and CN Rail, good enough results, but not good enough given that the economies are strong as they are.
It's Barry Schwartz and his brief outlook on markets. We'll be back with Barry after this. He, of course, is Chief Investment Officer at Baskin Wealth Management. Your questions on North American large cap stocks are next. There's the number and the email address.